Welcome back. The stock market has the power to make you a lot of money or be the cause of losing a lot of money. With the Dow's trending upward, is that a sign that 2017 is a great year to incorporate stocks into your money portfolio? Our great friend of the show, JB Bryant, is here with all the details. So, is 2017 the year to put all that money in the stock market? Well, in my case, a little bit of money in the stock market.
And I think that some people are actually really worried about that or thinking that they're missing the boat. And in reality, the Gallup poll says that about 50% of us, so 1 out of every 2 of us actually is in the stock market. No, half of this room is not. Half of people at home are not even participating. And that was as of April of this year. And that is dramatically lower than in like 2006. And the numbers were in the early 2000s, you were looking at about 60% of the households had money in the stock market.
I thought everybody was in with 401ks and stuff.
Well, a lot of people, when they get into their 401ks, they still avoid things that have exposure to stock, believe it or not. Okay. So this is a good time for people to reintroduce themselves to it. Do they need to have stocks included in their retirement plans, in their financial goals? And the most important thing is to take this time to say, what is my time horizon? What is my risk tolerance? And get to know how stocks can be included into your investment portfolio. And that is getting an understanding of the major asset classes. The major asset classes include stocks, bonds, and cash. And in that area, if you're not doing any stocks, then that means you've left out one of the 3 major asset classes. So we do need to at least consider putting stocks into our portfolio. What percentage of our money is in stocks? That becomes your question. And that's when your risk tolerance, your risk level, your time horizon comes into play.
So basically, because this is what you do. That's what you do every day. And the rest of us don't. And so we look at it and go like, okay, JB says I should be in. But how I should be in, I need to find out from
and that's I'm glad you said it that way, because as you said, in the 401ks, typically that is probably, if we looked at the numbers of the 50% that are participating, the majority of them would be through mutual funds and mutual funds through their work retirement plans, or even mutual funds that they hold individually. And when you move towards how many people really owned individual stocks, you're probably looking at a much smaller percentage. So mutual funds are a good way for an investor to get introduced to stock investing, because mutual funds, they have managers who do the work for you.
Okay, so the stock market is pretty volatile from time to time. And as we all have been watching, things are changing really quick now. We're going through a real big culture change, different political party going to be in charge, Sure. different ways of doing things. Sure. Is this a good time or a bad time? Because what if I do say, okay, I'm going in, and I've listened to JB, and I'm going to kind of cover myself, and then it just plummets. What happens then?
Well, that is why diversification, understanding your allocation, is very important, so that you realize that that percentage of your portfolio is more likely to be volatile for you, but historically is more likely to outpace the cost of living over the long term. So that's your growth section. The stock portion of your portfolio is for growth. Interesting time of year that we're in, there's something approaching called a Santa Claus rally. Have you ever heard of that?
Well, it's Christmas.
That's right. And usually the Santa Claus stock rally, if we experience one, because we've been having a rally, like Santa Claus is already here for a lot of investors. So, but if that comes with the week between Christmas and New Year's, there's a Santa Claus rally that happens a lot. And the question comes, like you said, why is this happening? You know, is this indicative of what's going to happen in 2017? And it's really hard to tell. But our big question here is, how is next week going to be? And how is the January effect? We have a name for everything. And in January, you tend to have, there's been some historical rallies, and they're called the January effect, of people just feeling positive about the new year. The Santa Claus rally, some of the explanations for it is that people just feel more positive, and the pessimists are not in the market that week, and people are investing bonuses. There's just so many different explanations for that, but the most important thing to consider is making sure that you're invested appropriately for your specific needs. And sometimes that includes talking with a financial professional, getting professional advice, but most importantly, really looking at your investment options, looking at their historical performance, and realizing that the past is no guarantee of the future. So even though we're having a great run right now, that doesn't mean that later today everything will turn around or tomorrow.
All right.
But so be careful.
We're out of time. One word answer. One word
Okay.
answer. Okay. The stock market has been going up for several years in a row now. Yes or no?
Yes.
Is it going to go up in 2017?
There is no guarantee of that. Did you say yes or no?
I said
Like
yes
you
or
want
no.
you want me to get in trouble? Like there's laws against that.
I tried.
I love you, Bill, but-
JP Bryant offers free money seminars every month, every seminar on Wednesday at noon, and then select Saturday mornings at 10 a.m. at her office in Glen Allen. See if you can nail her down. Pre-registration is required. Just visit us online at WTVR.com, VTM for a link for more information.